Welcome to another deep dive.
Hmm.
Today we're taking a look at the world of alternative investments.
Oh, cool.
And we're going to be taking a lot of inspiration from this book, The Holy Grail of Investing.
Okay.
And we're basically trying to figure out how the ultra wealthy are shifting their strategies.
Okay.
And basically think of this as your shortcut to figure out why they're moving away from traditional stocks and bonds.
Right.
And maybe even figure out what exciting new avenues are opening up. Maybe even for you, we'll be
Yeah.
exploring a ton of different things,
Okay.
from private equity and pro sports teams to the future of energy and even innovations like green hydrogen,
Wow.
things that you might not even have considered investing in.
Yeah. I mean, there are so many things out there that I think the average investor doesn't even know about.
Exactly.
That, could be a really good opportunity.
Right. And that's kind of what I think is really interesting about this book,
Okay.
is that it's pulling back the curtain on these strategies that I think most of us don't know about. It's not about chasing the latest fads.
Right.
It's about the ultra wealthy and how they're deliberately and informally shifting how they're thinking about their wealth.
Yeah. What's really cool about this is that the book starts with the author's personal wake-up call during the 2008 financial crisis.
Oh, yeah.
And he saw how it impacted so many people from, all walks of life.
Of course.
And he really wanted to figure out how to achieve those consistent returns even when the market's in turmoil.
Yeah, that's the $1 million question, I think, for every investor is how do I make sure that I'm not going to lose everything
Big
when
thing.
the market takes a downturn?
Yeah.
So what he discovered during his research.
So through his interviews with these billionaires, he noticed a common thread,
Okay.
and that was asset allocation.
Okay.
So really the key take
Asset allocation being.
not about picking one hot stock.
Right.
It's about structuring your entire portfolio to be able to withstand any of those economic storms that could come your way.
So you're not trying to time the market. You're just trying to make sure that you're ready for whatever happens.
Right.
Okay, that makes sense. And then the book goes on to argue that sticking just with stocks and bonds might not cut it anymore.
Yeah.
And it says that they've shown increasing correlation in recent years, meaning that they kind of move up or down together.
Yeah.
So why is this a concern for investors?
So if your entire portfolio is in stocks and bonds, you're way more vulnerable when the market takes a downturn.
Okay.
And so the book uses REITs as a really great example.
Okay, so REITs being real estate investment trusts.
Uh-huh.
Okay, so tell me more about that, because when I think about real estate, I always think diversification.
Well, that's what it seems like.
Right.
But they actually often fall right alongside the stock market,
Really?
like we saw back in 2022.
Oh, yeah. 2022 was a rough year
Uh-huh.
for many people. So this is where alternative investments comes in.
Yes.
So can you help us understand what are these alternatives?
So they're essentially investments that are outside the realm of like your typical stocks, bonds, mutual funds.
Okay.
And it's not some kind of fringe idea.
Right.
The book even cites a KKR survey
Yeah.
showing that the world's wealthiest families are allocating 50 to 80% of their portfolios towards alternatives.
Wow, 50 to 80%. That's a huge chunk of their portfolio.
It is.
So what's driving this move? Why are they moving towards alternatives so much?
It's really all about the pursuit of returns that aren't directly linked to the stock market swings.
Right, because the stock market is so volatile and unpredictable. And I
Yeah.
think they're just trying to find some stability during those times.
Exactly.
So then the book highlights one alternative in particular, and it's private equity.
Okay.
And can you break down what private equity actually is for those who maybe haven't heard of it?
In the simplest terms, it's really just investing in privately held companies,
Okay.
ones that you won't find on the stock market.
Yep.
And so the book really argues that private equity has been so successful because it allows firms to operate with long-term vision.
Okay, so can you explain a little bit more about what that long-term vision means?
So it's really about building lasting value instead of going after those short-term gains.
Okay.
Public companies face pressure to deliver immediate results,
Right.
quarter after quarter.
Right, they have to please their shareholders.
Right, and that can actually lead to some short-sighted decisions.
Okay.
Whereas private equity firms can really focus on those strategies that might take years to fully unfold, but ultimately lead to way greater returns.
That makes sense. So it's like planting a quick growing flower versus like nurturing a mighty oak tree.
Yeah, exactly.
The oak tree is going to take a lot longer to grow, but it's going to be much stronger.
Right.
So the book mentions that private equity has outperformed the S&P 500 for 35 years straight.
Yes.
And it gives an example that $1 million invested in the S&P 500 would be worth $26 million today.
Okay.
but $1 million in private equity would be worth $139 million. So that's a huge difference. What contributes to that discrepancy?
So one of the key reasons is the hands-on approach that private equity firms take.
Okay.
And so it's not just about providing the capital, it's about actively working with the management teams to improve operations and really just strategize for growth and help them to unlock the company's potential.
So they're really involved. They're not
Yeah.
just handing off the money and hoping for the best.
Exactly. They roll up their sleeves and they really become partners in success.
Okay, so it's about having skin in the game
Uh,
and being actively involved.
okay.
That makes sense. And then the book goes on to talk about GP stakes.
Yes.
So for people who aren't familiar with that, can you demystify that term for us?
So think of it this way. Instead of investing directly into the company, you're investing in the asset management firm,
Okay.
the ones that are calling the shots, running the funds.
Oh, so you're investing in the people who are choosing the companies to invest in.
Right. And because these firms are managing billions of dollars, even a small stake can generate substantial returns.
Okay, that makes sense. But how does someone who doesn't have billions to throw around,
Yeah.
how do they get access to these GP stakes?
So that's where the opportunity lies.
Okay.
These GP firms often need capital to expand, so they'll sell stakes in their own business.
Okay.
It's very similar to how a company might go public on the stock market.
Okay.
But you're getting in on the ground floor with a firm that's already a powerhouse.
So you're not investing in some startup. You're investing in something that's already established and successful,
Right.
and that hopefully will continue to be successful.
Uh-huh.
Okay, that makes sense. So now let's switch gears and talk about something maybe a little bit more glamorous.
Okay.
Pro sports teams.
Oh, cool.
And I always thought this was just for billionaires.
Yeah.
So has something changed?
It used to be that way. It was a
Right.
very exclusive club.
Right.
But there have been some rule changes that have opened up possibilities for a broader range of investors.
Okay.
And it's no longer just about owning the entire team.
Okay.
Funds are now pooling resources to buy minority stakes in multiple teams.
So you can diversify.
Right.
Instead of just having all your money in one team,
Right.
you're spreading it out across a bunch,
Uh-huh.
and that decreases the risk.
Exactly.
Okay, that makes a lot of sense. And then, when I think about pro sports teams, I think about, like, Moneyball
Oh, yeah.
and how they were using data and analytics to find undervalued teams.
Yeah.
So are these funds using those same techniques?
They're leveraging data to make informed decisions.
Okay.
They're analyzing everything from team financials to player performance.
Okay.
But they also look at things like brand value, fan loyalty,
Okay.
and the potential for future revenue growth.
So they're looking at everything. They're not just looking at the stats.
Right. It's a combination of data-driven insights and understanding the cultural impact.
That makes sense. So they're looking at the numbers and the emotion.
Yeah.
Okay, that's interesting. The book even shares a really compelling story about the LA Dodgers,
Oh, yeah.
that they were purchased for $2 billion, but they generated $7 billion in revenue in just 1 year.
Wow.
That's incredible.
It is.
I had no idea how much money circulated in professional sports.
Yeah.
Okay, so let's shift gears again.
Okay.
The book also talks about private credit.
Yeah.
And honestly, this sounds kind of intimidating at first,
Okay.
but can you break it down for us?
So it's really simpler than it sounds. You're acting as a lender to companies,
Okay.
bypassing the traditional banks.
Oh, so it's like being your own bank, but on a smaller scale.
Right.
And is it fair to say that private credit is kind of filling a void that's been left by banks,
Yes.
especially with interest rates going up and banks tightening their lending practices?
Mm-hmm.
It's becoming a lot more appealing.
Right. And in fact, it's projected to reach $2.3 trillion by 2027.
That's incredible.
Yeah.
What makes it so attractive to investors?
So for one, it offers steady income streams that aren't as correlated with the stock market.
Okay, so you get that stability.
Uh-huh.
And because you're lending directly, you have more control over the terms of the loan.
Right.
So you could potentially get higher returns.
Yeah.
Okay, so you're building a more stable foundation for your portfolio
Uh-huh.
while also having a more hands-on role.
Right.
Oh, that makes sense.
Right.
We've talked about private equity, pro sports teams, and now private credit.
Yes.
Are we sensing a theme here?
Yeah, I think what we're seeing is that you can diversify your portfolio beyond those familiar areas.
And are we seeing maybe a power shift away from those traditional institutions?
Exactly.
Okay, that's exciting. I'm starting to see the allure of these alternatives.
Yeah.
But there's still so much to uncover. in
Yeah.
the Holy Grail of Investing.
Mhm.
There's a lot more to discuss, from the future of energy to specific strategies for accessing these investments.
Right.
And that's why we have part 2 of our deep dive
Yeah.
coming up soon, where we'll continue exploring the Holy Grail of investing.
Great.
So stay tuned.
Can't wait. Welcome back to our deep dive into the Holy Grail of investing.
Okay, so last time we were talking about how these alternative investments are becoming more accessible and they're moving beyond those exclusive circles of the ultra wealthy.
Right.
And we touched on some pretty exciting opportunities,
Yes.
like GP stakes and even owning a piece of a pro sports team.
Uh-huh.
But now I'm really curious to hear from the people who are making these strategies actually work.
Yeah.
So the book actually features interviews with some really influential figures in the investment world.
Yeah, it's a really great lineup.
It is. I'm excited to hear their perspective.
You too.
So the first investor that's profiled in the book is Robert F. Smith.
Okay.
He is the founder and CEO of Vista Equity Partners.
I've heard of them.
They're a private equity giant. They manage over $97 billion.
Wow.
What stood out to you about his approach to investing?
So his emphasis on what he calls the liberation of the human spirit really stood out to me.
Okay.
He believes that businesses should be about more than just profits.
Okay.
They should be about making a positive impact.
That's cool. I like that philosophy.
Yeah, me too. It's encouraging to see these investors aligning their financial goals with their values.
Absolutely.
Hmm.
So how does that translate into investment decisions?
So Smith explains that Vista really focuses on software companies that are solving real-world problems,
Okay.
that are improving people's lives.
So they're not just chasing trends.
Yeah.
They're really trying to make a difference.
Yeah, they want to make a tangible difference.
And this approach has been incredibly successful for them. They've had great returns, and they're supporting companies that are doing good in the world.
Exactly.
It's a win-win.
I like it.
Yeah.
The book also highlights the importance of specialization
Yes.
and how Vista leverages its expertise in the software industry to their advantage.
So it's kind of like, if you go to a general practitioner, they'll refer you to a specialist
Right.
for a more complex issue.
Vista is like that specialist.
Okay.
They have this depth of knowledge that allows them to see these opportunities that others might miss
Makes sense.
and to really understand the nuances of the market.
So it's about more than just providing the capital. It's
Yeah.
about actually understanding the industry and the businesses that you're investing in.
Exactly.
Okay, so who's next on our roster of investing titans?
Okay, so next, the book takes us to Ramzi Musallam.
Okay.
He's the CEO of Veritas Capital.
And what do they do?
They focus on acquiring companies in sectors like healthcare, national security, and education.
So heavily regulated industries.
Yes.
Those don't exactly scream private equity targets.
No, they don't.
So what makes Veritas's approach unique?
What's really fascinating is they've carved out this niche by mastering the complexities of these sectors that are often overlooked.
Because they're so complicated.
Yeah, so many people shy away from these bureaucratic hurdles.
Right. It can be intimidating.
But Veritas sees opportunity there. And Muslim explains that they believe that these government-related businesses have untapped potential.
Okay, so they can streamline them and make them more efficient.
Yeah, make them more innovative.
They're not just looking to make a quick buck.
No.
They're really trying to improve these businesses.
Make them more valuable in the long run.
So they have a long-term perspective.
They do. They really understand those government processes and regulatory frameworks.
Okay, and that gives them an edge.
Yeah.
Okay, that's fascinating.
Yeah.
All right, so speaking of cracking codes, let's talk about venture capital.
Okay.
The book features Vinod Khosla,
Yes.
the founder of Khosla Ventures.
He's a legend.
He is. And his name is synonymous with Silicon Valley success.
Yeah.
I mean, he's backed companies like Amazon, Google, and Twitter.
It's an incredible track record.
It is. So what insights does he offer about the world of venture capital?
So he emphasizes that it's not just about backing ideas.
Okay.
It's about backing really bold ideas
Okay.
that could reshape entire industries.
That takes a certain level of courage.
It does. It takes a lot of courage to bet on the future when others might see it as too risky.
Right. It's easy to look back and say, oh, yeah, that was a great investment.
Uh-huh.
But when you're in the moment, it's a lot harder to tell.
It is.
So what are some of the things that he looks for in companies?
He always talks about the importance of a strong founding team.
Okay.
They have to have a clear vision,
Okay.
a deep understanding of the market that they're trying to disrupt.
Right.
But most importantly, they have to be able to execute.
So they have to be able to actually do it.
Yeah, it's not enough to have a cool idea.
Right.
You have to be able to build a sustainable business.
That makes sense.
Yeah.
So it's about finding the right people with the right ideas at the right time.
Yes, timing is key.
Okay, that's fascinating.
And he points out that some of the best opportunities emerge during times of disruption
Okay,
when those established industries are being challenged by these new technologies.
that makes sense.
Yeah, so it's about recognizing those shifts and being bold enough to invest in the future even when things are uncertain.
I like that. So they have to have the foresight to see the wave coming
Right,
and the
that-
courage to ride it.
Exactly.
Okay, that's really cool. So let's shift our focus to Asia now.
Okay.
The book features Michael B. Kim.
Okay.
He's the founder of MBK Partners,
Yeah, they are.
one of the largest private equity firms in Asia.
Wow.
And his perspective is really valuable because he kind of bridges the world of Eastern and Western finance.
Yeah.
And he says that people make the mistake of approaching Asian markets with a Western mindset.
Right. They don't really understand the nuances.
Exactly. And those opportunities that are there.
And he argues that Asia has just incredible potential
Oh,
with
wow.
the booming middle class
Right.
and just the rising consumer spending.
So there's a lot of opportunity there.
There is.
So what's been MBK Partners' approach to investing in Asia?
So they primarily focus on buyouts and growth investments, targeting sectors like consumer goods, media, and telecommunications.
That makes sense with the booming middle class,
Yes.
rising consumer spending.
Right.
So they're really tapping into that wave.
Yeah.
That's smart. So what are some of the key insights that he shares about their success?
He stresses the importance of having a strong local presence.
Okay, so they're not just doing it from afar.
No.
Or actually there.
They have boots on the ground.
That makes sense?
Yeah, you have to understand each market's unique cultural nuances.
Okay. And then he also talks about patience and discipline.
Yes.
Why is that so important?
Building successful businesses in Asia takes time.
Okay.
It's not about making quick flips.
Right.
It's about fostering long-term partnerships and nurturing growth.
I like that analogy. It's like planting a seed and watching it grow into a tree.
Yeah,
It takes time and care.
right.
So let's shift our focus back to the U.S. now
Okay.
with Bill Ford,
Okay.
the founder and CEO of General Capital Group.
And what do they specialize in?
They're a leading private equity firm, and they focus on healthcare technology and financial services.
Okay.
And Ford emphasizes that his firm's success is really rooted in their deep industry expertise, their rigorous investment process, and their commitment to collaborating with exceptional management teams.
Okay, so what are some of the characteristics that he looks for in those management teams?
He says that they have to have a strong track record,
Okay.
a passion for their business,
Uh-huh.
and a shared vision for the future.
So it's not just about finding competent managers.
No.
It's about finding partners.
That's interesting.
Yeah.
Okay, so he's looking for that synergy
Mm.
between investors and management working together to create something special.
Exactly.
And then he also highlights the importance of being really selective
Yes.
in their investments. So they're not just chasing after every shiny object.
Right.
They're carefully choosing opportunities.
Where they see a clear path to growth.
Okay, so quality over quantity. Okay, that makes sense.
Mm-hmm.
So now let's dive into the energy sector
Right.
with Bob Zorich,
Okay.
the co-founder of NCAP Investments,
And they are.
one of the largest energy-focused private equity firms globally.
Wow.
And, given the current energy landscape, I'm really curious about their perspective. Because
Yeah.
there's all this talk about climate change
Right.
and the transition to renewables.
Yeah, it's a really complex and evolving terrain.
So how are they navigating this?
So Zorich acknowledges that the energy industry is going through a major transformation,
Okay.
but he also believes that oil and gas will still be essential for meeting global energy demands.
Okay, so he's not discounting them entirely.
No.
He's saying there's still a place for them.
Right, at least for the years to come.
Okay.
But he sees a bridge between those traditional energy sources and a more sustainable future.
Okay, I like that.
Yeah, and a bridge that's really built by innovation.
So it's not about ignoring the need for change. It's about finding those practical solutions that will help us to bridge the gap.
Exactly.
So what is NCAP doing to invest in that bridge?
So they're actively seeking out companies that are developing technologies to reduce the environmental impact of oil and gas production.
Okay, so they're trying to make it cleaner and more efficient.
To minimize the footprint.
Okay, that's
Yeah.
interesting.
Yeah.
And their deep understanding of the energy sector allows them to do that.
Exactly.
So they're taking that long-term perspective.
Okay.
That's cool. Now let's go back to the high-stakes world of pro sports
All right.
with Ian Charles.
Okay.
He's the co-founder of Arctos Sports Partners.
And we talked about them before.
We did. I'm just curious to hear more about their strategy.
Okay.
What makes them stand out in this world?
So Charles recognizes that the sports industry is undergoing a massive transformation.
Okay, in what way?
So it's not just about ticket sales anymore.
Okay.
It's really a global entertainment industry.
Oh, that's interesting.
Yeah, and it's fueled by rising media rights values and these new revenue streams from streaming services.
Okay.
And just a passionate global fan base.
Okay.
So their approach is very data-driven.
Okay.
They employ a team of experts who analyze every aspect of a team.
Wow.
Yeah, from the financials to fan demographics to
yeah.
player performance.
Okay, so they're not leaving any stone unturned.
No, they want to get a full picture.
And it's not just about the numbers.
Right.
They're also looking at brand strength, fan loyalty, all those things.
And the potential for revenue growth.
Okay.
So they're really combining that data analysis with an understanding of the cultural dynamics of sports.
So they understand that a sports team is more than just a business.
Yes.
Okay, so let's move to middle market lending now
Okay.
with David Golub,
Right.
the president and CEO of Golub Capital.
And what do they do?
So they're one of the largest middle market direct lenders in the U.S.,
Okay.
and they specialize in providing loans to those mid-sized companies that don't qualify for traditional financing.
Oh, so they're kind of filling that gap.
Exactly. Yeah.
Interesting.
So what makes them stand out in this lending landscape?
So Golub really highlights their deep understanding of the middle market.
Okay.
And they know these companies inside and out.
Right.
And they tailor their financing solutions to meet their specific needs.
Okay, so it's not a one-size-fits-all approach.
No.
They really personalize it.
Yeah.
Okay, and what are some of the factors that they consider when they're evaluating a potential borrower?
So they look for a strong management team,
Okay.
a sound business model that can withstand economic storms,
Right.
and a consistent track record of profitability.
So they're not looking to gamble.
No.
They're looking for those solid businesses
Right.
that are built to last.
Okay, so they're identifying those hidden champions of the business world,
Yeah,
the ones that are driving the economy, but might not be on everyone's radar.
exactly.
And they have a flexible and creative approach to lending. Yeah, they recognize that these companies often have unique circumstances,
Okay,
and they're willing to structure deals that fit those needs.
so they're more of a partner than just a lender,
Uh-huh.
and they're working alongside these companies to help them to achieve their goals.
Yeah, and that approach extends to their relationships with private equity firms, too,
Okay.
who often back these middle-market companies.
Okay, so they understand that dynamic.
Yes.
Okay, that makes sense. So now let's dive back into the energy sector
All right.
with Will Van Loo,
Okay.
the founder and CEO of Quantum Energy Partners,
And they focus on.
energy infrastructure and innovation.
Okay.
And we've talked about the transition to renewable energy,
Mm-hmm.
but I'm curious, what role does energy infrastructure play in that?
So Van Loo points out that regardless of the energy source,
Okay.
whether it's oil, gas, solar, wind, green hydrogen,
Okay.
it all has to be transported, stored, and processed.
Right.
And that's where energy infrastructure comes in.
So it's the backbone of
Yeah.
the whole energy industry.
Uh-huh. It's essential.
That makes sense. And what makes their approach to infrastructure investing unique?
So they're not betting on any one horse in the race.
Okay.
They're investing in the racetrack itself.
I like that.
Yeah. So their investments aren't tied to any one energy source.
Okay, so it doesn't matter which one wins.
Right.
They're going to benefit regardless.
Exactly.
That's smart. And then their expertise allows them to identify undervalued assets,
Uh-huh.
opportunities that others might miss.
Right.
So what are they looking for specifically?
So strategic locations, well-maintained facilities, and long-term revenue streams.
So it sounds like they're applying a value investing approach to energy infrastructure.
Uh-huh. Finding those assets
hmm
that are generating consistent cash flow.
But that might be overlooked.
Right.
Okay, that's interesting.
Mm.
What are some of the key factors that he looks for in potential investments?
So he really prioritizes a strong management team
Okay.
with a proven track record.
Right.
He also looks for assets that have a clear competitive advantage, a favorable regulatory environment, and a solid path to future growth.
Okay, so they want to know that this is an asset that's going to last,
Yeah,
that it's going to generate those returns even when the market is fluctuating.
exactly.
Okay, so now let's hear from David Sachs.
All right.
He's a seasoned investor and entrepreneur in Silicon Valley.
Yeah, he's backed some big names.
He has. He's backed companies like Airbnb, SpaceX, Palantir Technologies.
Wow, that's impressive.
It is. So what insights does he offer about the current investment landscape?
So he believes that the world is changing at an unprecedented pace.
Okay.
and that investors need to be agile, adaptable, and constantly learning to keep up.
So they have to have that growth mindset. They have
Yeah.
to be willing to evolve
Yeah.
as the world evolves.
Exactly.
And he thinks the best investors are the ones who are always asking questions.
Yes, they're perpetually curious.
And they're not afraid to challenge those traditional ways of thinking. I like that. So what specific qualities does he look for in companies?
He really emphasizes the importance of a visionary founding team,
Okay.
one that not only has a great idea,
Right.
but the drive and the ability to bring that idea to life.
That makes sense.
Yeah.
So they're not just looking at the idea itself.
No.
They're looking at the people behind it.
Exactly.
Okay, cool. Now let's dive back into the world of venture capital
Right.
with Tony Florence.
Okay.
He's the CEO and managing partner of New Enterprise Associates.
Okay.
They're a legendary firm, and they've backed some incredibly successful companies.
They have.
So what insights does he offer about navigating this world?
So Florence emphasizes that venture capital is a long game.
Okay.
It's not about get-rich-quick schemes.
Right.
It's about nurturing these game-changing companies as they grow.
Okay.
And he believes that having deep industry knowledge, a rigorous investment process, and a commitment to supporting those entrepreneurs is key.
So they're not just giving money.
No.
They're giving guidance.
Support resources.
It's about finding the right companies and then giving them what they need
Right.
to succeed.
Exactly.
Mm-hmm.
And NEA has this deep network of relationships,
Okay.
which allows them to see deals that others might miss.
That makes sense. So they're very selective.
They are.
They only invest in a small fraction of the companies they review. What are some of the things that they look for?
So they want to see that strong founding team again,
Okay.
with a clear vision, a deep understanding of the market, and the ability to execute their plan.
So not just innovative, but also commercially viable.
Right. And Florence also highlights the importance of timing.
Okay.
He says that just like Khosla said, some of the best opportunities come during times of disruption.
Okay, so when those new technologies are shaking things up, it's about anticipating the future and betting on the companies that are building it.
Yes.
Okay, so let's talk about GP stakes again.
Right.
And Michael Reese,
Okay.
the co-founder and CEO of Dial Capital Partners, he's a pioneer in this space. And we talked about GP stakes before.
Right. It's investing in those asset management firms
Right.
rather than just the funds they manage.
Right.
And Rees recognized early on that these private equity firms were generating great returns.
Okay.
And that their businesses were super valuable.
So he saw an opportunity there
He did.
to invest in the talent expertise and the infrastructure that was driving those returns.
Yeah.
So you're investing in the engine that powers the investment machine.
Right.
That's cool. And Dial's success hinges on their relationships in the private equity industry and their due diligence process.
They want to make sure they're partnering with the best firms.
Right. So what do they look for when they're considering a GP stake investment?
So they want to see a strong and consistent track record,
Okay.
a differentiated investment strategy,
Okay.
and a talented and experienced team.
So they're looking for the best of the best.
Yes.
And he also emphasizes the importance of alignment. What does that mean?
So they want to partner with firms that share their values and their long-term vision.
Okay, so they're not just looking at the numbers.
No, they want to make sure it's a good fit.
They're looking for a partnership where both sides are working towards the same goal.
Right.
Okay, that's interesting. So now let's step into the world of real estate
Right.
with Barry Sternlicht,
Okay.
the founder of Starwood Capital Group.
Oh, wow. He's a legend.
He's known for his innovative approach and his ability to spot those hidden opportunities.
Yeah.
And he's been behind some iconic hotel brands. Lotto Hotels, St. Regis Sheraton.
I know all of those.
Right. So he knows what people want when it comes to real estate.
Uh-huh.
So what are his thoughts on the current real estate market?
So he acknowledges that it's facing some headwinds.
Okay, like what?
Rising interest rates, inflation,
Okay.
and the possibility of a recession.
So it's not all sunshine and roses.
No. But he believes there are always opportunities for those who are willing to think outside the box.
So it's about staying calm amidst all that chaos?
Yeah, and seeing the opportunities that emerge.
Okay, so he's a contrarian.
Yeah.
He's going against the herd mentality. He's seeing value where others see risk.
Yes.
Okay, I like that. So what does he look for when he's evaluating a potential real estate investment?
So, of course, location, location, location.
Right, of course.
But beyond that, he looks for strong cash flow.
Oh, yeah.
a favorable regulatory environment, and the potential for appreciation.
Okay, so he's not looking for those quick flips.
No, he's building a portfolio that's designed to generate returns over time.
Right. So he's playing the long game,
Uh-huh.
and he says that discipline is key.
Yeah. You have to be able to walk away if the numbers don't make sense.
So it's about having the patience and the wisdom to know when to say no.
Exactly.
Okay, so now let's hear from Tony Robbins.
Wait, Tony Robbins is the motivational speaker.
Yes.
What does he know about investing?
That's what I thought. But he's spent decades interviewing these super successful investors,
Oh, wow.
and he's taken their wisdom and distilled it into principles that anyone can apply.
Okay, so what's his take on alternative investments?
He believes that the real holy grail of investing
Okay.
isn't about finding some secret formula.
Okay.
It's about aligning your financial goals with your values.
Okay, so investing with a sense of purpose.
Exactly.
That's interesting.
And this approach can lead to a more fulfilling and meaningful investment journey.
Yeah, because it's not just about the money.
Right.
It's about creating a life that you love.
I like that. So, what advice does he give for achieving this?
So he emphasizes the importance of clarity,
Okay.
defining your values, your goals,
Right.
and what you want to achieve.
What's your why?
Yeah.
Oh, okay.
He also stresses the importance of education,
Okay.
empowering yourself with knowledge,
Right.
and seeking guidance from advisors.
So take control of your financial destiny. Don't just blindly follow what other people are doing.
Right, and he also highlights diversification,
Okay.
not putting all your eggs in one basket.
Right. That's important.
Uh-huh.
Well-
Spreading those investments across different asset classes.
And being patient,
Yes.
because investing is a marathon, not a sprint.
Yes.
And you have to be able to weather those market fluctuations.
Yeah.
And then he also encourages investors to think about the impact their investments are having on the world.
Yeah, are they supporting businesses that align with their values?
Exactly. So your money can be used as a force for good.
Right.
That's a really cool concept.
It is. And it aligns with what we've heard from so many of the investors in the book,
Okay.
that investing isn't just about generating returns, it's about creating a better world.
I like that a lot.
Yeah.
So now let's shift our focus to the importance of mindset.
Okay.
How does that play into investing?
So many of these investors emphasize that success in investing, just like anything in life, starts with the right mindset. And they talk about having a growth mindset.
Okay, so believing you can always learn and improve.
Yes.
Okay.
And an abundance mindset.
What's that?
So believing that there are enough opportunities for everyone to succeed,
Okay.
and that collaboration is more powerful than competition.
It's not a zero-sum game.
Right.
There's enough to go around. And then resilience,
Yes.
being able to bounce back from setbacks.
Right. The market has its ups and downs.
And then risk management is a big one too.
Yes.
How do they approach that?
They say it's important to really understand the risks involved in any investment before you commit any capital.
Okay, so do your homework.
Uh-huh.
Don't just jump into something blindly.
Right.
And diversification again.
Yes, that's key.
That keeps coming up.
It does.
It's so important.
Uh-huh. Spread your investments across different asset classes.
Okay, that makes sense.
And have a long-term perspective.
Okay.
Investing is a marathon, not a sprint.
And you have to be patient and trust the process. Okay, so now let's talk about finding your niche.
Okay.
How does that apply to investing?
So many of the investors in the book emphasize the importance of specializing in an area of investing.
Okay, so like private equity, venture capital.
Right.
Or
Something else entirely.
and that gives you a competitive advantage.
It does.
Okay.
When you're deeply immersed in an industry or an asset class, you really understand those market dynamics
Right.
and the risks and rewards.
Okay, so you become an expert.
Yeah, it's like becoming a master chef.
I like that.
You hone your skills
Right.
until you can create those masterpieces.
And then it's also about passion.
Yeah.
Finding something that you're really excited about
Right.
so that you're naturally more curious and driven.
Right. You're willing to put in the time and effort.
Okay, so you have to find that sweet spot where your skills and your interests align.
Exactly.
Okay, cool. Now let's talk about the importance of building a strong team.
Okay.
How does that come into play when we're talking about investing?
So many of these investors say they couldn't have achieved their success without their team.
Really?
Yeah.
It seems like such an individualistic pursuit.
Well, it's really not.
Okay.
Investing requires collaboration
Okay.
and diverse perspectives
Okay.
and a shared vision.
So it's like building a championship sports team.
Exactly.
You need the right players in the right positions,
Uh-huh.
all working together.
That makes sense. So what are some of the things that they say are important when building a team?
They talk about the importance of surrounding yourself with people who are smarter than you,
Okay.
people who challenge you and who bring their own unique skills to the table.
So you're building a team that complements your strengths and weaknesses.
Exactly.
Okay.
And they also talk about fostering trust and open communication.
Okay, so it's about creating that environment where everyone feels valued and heard
Yes.
and that they can contribute.
Mm-hmm.
That makes sense.
Yeah.
So now let's talk about networking.
Okay.
How does that play into investing? It's more strategic than you might think.
Okay.
Many of these investors emphasize the importance of cultivating relationships,
Okay.
not just with other investors,
Right.
but with entrepreneurs, industry experts, thought leaders.
Okay.
Because these relationships can open doors to better deals.
That makes sense.
They provide access to valuable insights,
Okay.
and they foster a more collaborative environment.
It's like having a secret weapon
Yeah.
in your investing arsenal, a
Right.
network of people who can help you to... Okay, so you're saying that these relationships can open doors to better deals.
Exactly.
They can provide access to valuable insights,
Yeah.
and they can foster a more collaborative environment.
It's like having a secret weapon.
Yeah, in your investing arsenal,
Mhm.
a network of people who can help you to navigate the complexities of the market.
And achieve greater success together.
Exactly. And the book really emphasizes that you have to make a genuine effort to cultivate these relationships,
Yes.
and you have to be committed to creating those win-win situations.
It's not about just networking for your own personal gain.
Right. It has to be authentic.
Yeah, you're fostering connections based on shared values,
Okay.
mutual respect,
Right.
and a genuine desire to see each other succeed.
Okay. So it's not transactional. It's
Right.
about really building a relationship
Yeah.
and understanding each other.
Uh-huh.
And the book has a really great story about Ian Charles,
Okay.
who's the co-founder of Arctos Sports Partners.
Yes.
And it really illustrates this point.
Okay, tell me more.
So it's about this young man who worked for one of the teams that Arctos invested in.
Okay.
And he was struggling financially.
Oh, wow.
And so Charles decided to lend him money to buy a car.
That's really generous.
It was.
Yeah.
And it wasn't like a handout.
Yeah.
It was an investment in this young man's future.
Okay.
And what happened?
So this young man actually went on to become like a star employee.
Oh, wow.
Yeah, he exceeded everyone's expectations.
So it shows that sometimes the most rewarding investments
Yeah.
aren't measured in just financial returns.
Right.
It's about the impact that you can have on other people's lives.
It's about the human connection.
Exactly. Okay, so now we're at the final chapter of the book.
All right.
And Tony Robbins is sharing his own personal philosophy of investing.
Yeah, this is really interesting because, he's interviewed so many financial titans.
He has, and he's learned so much from them.
Yep.
So I'm really curious to hear what he has to say.
Me too.
So what does he say is the real holy grail of investing?
So he says it's not about finding that secret formula or that magic bullet.
Okay.
It's about aligning your financial goals with your values.
Okay, so your portfolio should reflect who you are
Yeah,
and what you want to achieve in the world.
exactly.
So it's about investing with purpose.
Yes.
I like that.
Yeah.
And he says that this approach can lead to a much more fulfilling and meaningful investment journey.
It's not just about the money.
Right.
It's about creating a life that you love.
And using your wealth to make a positive impact.
Exactly. So what guidance does he offer to actually achieve this alignment?
Okay, so first he talks about the importance of clarity.
Okay.
So you need to define your values,
Huh.
your goals, what you want to achieve with your wealth,
What does wealth really mean to you?
right?
It's a big question.
It is.
And it's not always easy to answer.
Right. And once you have that clarity, you can start to build that portfolio.
That reflects your values.
Yeah.
Okay, so it's get clear on your why
Uh-huh.
before you figure out the how.
Yes.
Okay.
And then he also stresses education.
Okay.
Empower yourself with knowledge
Right.
and seek guidance from trusted advisors.
Okay.
So take control of your financial destiny.
Right.
Don't just blindly follow the crowd.
And he highlights diversification.
Yes. Spread your investments.
Okay.
Don't put all your eggs in one basket.
And then patience.
Yeah. Investing is a marathon, not a sprint.
Okay, so we have to remember that
Yes.
because it's easy to get caught up in the short-term fluctuations
But we need to keep our eyes on the long-term prize.
and trust the process.
Right. And then he also encourages investors to think about the impact of their investments.
Yeah, are you supporting businesses that align with your values?
Right. Are you making the world a better place? Back with
Exactly.
your investments.
It's about recognizing that your money has power.
I like that.
Yeah,
So this deep dive has been incredible.
it has.
We've learned so much about alternative investments,
You have.
and we've heard from some amazing
I think
investors.
one of the biggest takeaways for me is that investing isn't just about making money.
Right. It's about aligning your financial goals with your values.
Exactly.
It's about building relationships
Yeah.
and creating a life of abundance and purpose.
It's about making an impact.
Exactly. So to our listeners, I encourage you to check out the book,
Yes.
The Holy Grail of Investing.
There's so much valuable information in there.
There is, and you might just discover something about yourself
That's right.
along the way.
Yeah.
So until next time, happy investing.
Happy investing.